Hello and welcome to the channel. Hope you guys are having a fantastic day. Today we're talking about BTG stock. This is a gold mining stock. It closed 4% higher in after hours on Friday, close of business day. And I'm looking at the stock for Monday, and I did my analysis, and I thought it would be a good idea to put it out there for you guys. Again, not a financial advice, just the facts out there that you could take a look at yourself. And also, some of the technicals that I've done where I think the stock is going to go. I want to talk about that in a second. So let's take a look at the company. It's a gold mining company. It's an international gold mining company. And again, with the market fear that is happening with the recession and market is fluctuating a lot. People are just trying to invest money in, stocks that are stable. So gold actually is a very lucrative product. As you know, gold always has a value and retains value. And hence the stock is actually, people, I guess, putting money in the stock as well. So let's take a look. It's a 4.4. Let me turn on the laser 1 second. It'll be easier to point out. It's $4.4 billion company. It's a large company. PE ratio is about 10, which is not that high, which is also great. EPS is 0.38, which means that this company is not in losses. This is profitable. This means this is profitable. The earnings per share is profitable. 52-week range for the stock is $3.30. That's the lowest it got to. $5 is the highest it got to. Okay, and the volume they trade on a daily basis about 12 million. On close of Friday, they did about 21 million. So a lot of shares were traded, as I said. A lot of fear in the market and people trying to put money in a stable stock. So this is why you see a lot of bigger numbers in here. As far as the balance sheet of this company is concerned, it's a huge balance sheet. It's 3.5 billion. And now it says 3.5 million, but you got to times that with 1,000. So it becomes 3.5 billion. 600 million total liabilities, and stockholder equity is about 2.9 billion. So it's a fairly large company, as I said. Operating cash flow is about 685 million. That means that their operations right now is successful. As I said, EPS is positive, which means they're not losing any money. That's a great news, right? So the operations is successful. On investing cash flow, which, they buy different expenses like different equipments, payments, acquisition of land, things like that, is about 304 million, negative 304 million, of course. And financing cash flow is negative 233, which means that the value of the stock is not retaining. And generally, if they're doing acquisitions, things like that, buying mergers, different companies, for example, they will be coming up in financing cash flow as well. So that is negative 233. They do have on hand $660 million in cash, and they do have free cash flow, 371 million. Now, free cash flow is different than end cash position. Free cash flow is free of any debts, anything like that. That's not for operations. This is just the free cash flow sitting in their product. Very stable stock. Very stable company, in my opinion. As far as the institutional ownership is concerned, they own about 53%. That's a fairly large number. Of course, as I said, even institutional banks, the big fund managers, for example, they invest money. There are two ways they go about this, right? Either they invest money in, some of the portfolio goes into hot stocks like, daily trading, and then also you have stable stocks for retirement plans, et cetera, et cetera. So there, when you use a big number like this, 53, 63, 73, that's like more like their stable investments. Strong buy. The analysts from all these firms are saying this is a strong buy. There's a lot of firms stating this is a strong buy. They think the average price should be around $6.27, and the lowest it could get to is $5.50. Of course, these analysts, they can't foresee the future. This is based on just the balance sheet and of course, detailed balance sheet analysis, cash flow, 10Qs, 10Ks, and I'm not doing that on this call because, this way, if I started doing this in this video, then it's going to be a long video. So that's why I keep it high level, just to give you an idea that overall financially, this company is very strong. Now, as far as a chart is concerned, look, generally I do my daily analysis, daily chart for swing trading. Sometimes, if I'm feeling it, and I usually do it 15 minutes, 30 minutes chart analysis as well, just so this is why I could get in, get out. Because again, you could do day trading, and if you don't have a margin account, you could do 3 trades per week. And, at least, this way you can still do your 3 trades and make money. Of course, one trade, if you buy 10 stocks, for example, and sell 10 stocks, that considered as one trade. So, of course, if you're buying, for example, 30 stocks, 50 stocks, and you're selling the same amount at the same time, that would consider as one day trade. So let's take a look at the 50-minute chart. Again, my rule that I have is 4-step process. You have accumulation, markup, distribution, and decline. And that cycle repeats itself everywhere you look, okay? It doesn't matter if it's a small one or a big one. It repeats itself all the time. And you could probably, if I was, for example, if I just go here and I could just show you, like, for example, this is accumulation, markup went up here, distribution happened, and decline happened, right? There's a little bit of retracement. This is where you need to be, steady, and you have to have a emotionless trading. There's retracements whenever there's a markup. For example, you have a markup here, there's a little bit of a retracement, then the markup stays up, and then you have a distribution. Distribution means that people are taking profit, okay? So let's take a look. Now, the other indicators that we're going to take a look is going to be EMA, of course, the exponential moving average, RSI, and MACD. So let's look at the four-step process here, where we have. So I have a couple of support and resistance here. Now, these support, the levels I have is to be noted. I have a support at around $4.06. Now, it's basically what's happening is I'm thinking that when it declines, right? Decline has to come down. It has to accumulate one or two candles. So if I could draw it out, for example, I think that'll be, it'll make more sense what I'm trying to say. So let's say if I say, okay, there is a red candle right here, okay, and there's going to be another red candle. And I'm thinking that, okay, if it's going to hit this, for example, it can accumulate right here. Okay, let's color that red. All right, I'd say, okay, there's two red candles. It stopped right here. This is my support, right? And I say, okay, it could probably just accumulate a little bit right here, like a green candle, for example. Let me just color this green for you guys. Green candle, then a little bit of accumulation happen. Now, accumulation is basically just people trying to make up their mind what they want to do at this point. And that's what happens. Generally, the accumulation could be a longer period, it could be smaller period, but when you see this flow and you see accumulation, the next step you already know that at some point the stock is going to take off, right? At this point, this stock is going to take off to next step, okay? And then what I'm thinking is if it takes off, it could go to the resistance that I established, right? Make this green, right? And it could go back here. Now, again, the point I'm trying to make is, right? So this is my take on this, right? So basically what I'm saying is, comes here, distribution happened, decline happened, it hit that support that I established. Now, this support is coming from a daily chart and is landing perfectly in a 15-minute chart. And I go in a hierarchy of weekly, daily, and of course, if there's a small resistance or support within that time frame as well. So let's say if I'm thinking that if it goes to $4, it can accumulate one or two candles or three candles, and then it gets shot back up to $4.22. And this is my opinion. Of course, this is not guaranteed. Nobody can predict the future, but of course, these indicators gives you an edge. That edge is basically it's the probability game. Okay, you gotta just understand that fact. For example, if I was to get in this trade, for example, I'll wait for the trade. I'll wait for it to come down. Let's say if it comes down right here, to start accumulate right here, I will definitely get in, and then my stop loss is going to be around $4. So if I'm thinking like if it goes to $4, I'm going to stop. If it goes to my levels, then I'm going to sell, of course. So now again, this is a speculation, right? As far as the exponential moving average is concerned, it's saying that it's tilting a little bit. That's the 13 period that I have. It's tilting a little bit, but it's generally it's not. It could, the 48 period could act as a support, as I said, right? It could act as a support and it could just bounce off of this and accumulate right here and then go up, or it could go down to the support that I established. So there's two ways you could go about, right? Now, as far as the RSI is concerned, it's about 53, which is, again, anything around 50 is accumulation, which is, I say, consolidation. And anything below 50, it considered to me is going down. And MACD is also popping down a little bit. Of course, these indicators are lagging. So, for example, if there's a shift in the price trend, the indicators will follow. And it doesn't work other way around. It does not work other way around. Please note that. Please understand that. If you see a MACD peeping out like this, do not just get into the trade, because it could very well, the next two candles can make you go up again. Okay, so never ever just go for MACD because it came out. For example, it could come out right here, and it doesn't really bounce off of it, and there's not much price action here, and you end up not really waiting, and then it just goes down, and then you end up panic sell, and then you lose a lot of money. So anytime you get in a trade, always put your stop losses first. Predetermine your stop losses. Don't just get in and think, all right, this is how I'm going to know. Think about where do you want to stop. Okay, that is the strategy. Always know where you want to stop. I keep my 10% on every trade I take. I'm 5 to 7. Sometime if I'm feeling lucky, I could do 10%. I was like, you know what, I'm gonna go 10%. If it declines 10%, I'm out of here. If it could be declined within a 1 minute, 10% decline, I'm out. This is how it is. I'll come back to it. I'm not gonna wait for the stock to go down and hope that it goes back up. That is deteriorating emotionally, and it gives a lot of stress. And for me, it's cost of business. Every time you lose money, it's cost of business. Everybody that does business, they lose money on business. This is your business. And if you're losing money, don't worry about it. Keep moving forward. This is your cost of business. Now, if the first trade you lost money, second trade you lost money, and the third one, same strategy, you have your 10% loss set, and it happens to pick up, you'll definitely make all the money you lost. Okay, so think of it like that, right? If you do business, usually that's how it works. If you have inventory sitting down and you're thinking like, oh, I'm in loss, for example, but you could sell 2 or 3 items that could cover you for your inventory cost of cost that you incurred to buy the items. Anyway, as far as the resistance are concerned, it's $4.22. If it crosses this, it could go up to $4.27, and if it crosses that, it goes down to $4.32. Now, again, stock is not very expensive. And of course, if you're looking for a long-term buy, of course, I would recommend getting into the stock when it gets to a little lower than, $4. Of course, the market is still fluctuating. So if you're looking for a long-term, this is going to be more of a short play, maybe a day or two swing trade. And you can see how the levels are behaving. These levels will stick because I draw them out of a daily chart. So this level will stick for a day or two. So definitely take a look at the stock. I just want to bring this out to you guys. Of course, this is all my speculations. Please do not think that this will happen. This is all speculation. Again, if it accumulates and if it start popping up, you can rest assured it's going to have a little bit of a markup. And of course, that'll be time to shine and then just come out of the trade right away. And of course, even if you get in, put your 5%, 10% loss, stop losses right away when you get into the trade, okay? And you'll never lose. I mean, you'll lose that 10%, but that percent you'll be able to make back when you keep doing the same strategy, okay? So talk to you guys. Of course, this is my quick video. I just want to put it out for you guys. So take a look. If you're not subscribed, do consider subscribing. Do give it a thumbs up if you like this video, and I'll talk to you guys in the next video.